Good morning, everyone. Welcome to Capital Markets Quickie. I'm your host, Endrit Cela, bringing you the latest updates on the stock market every weekday morning. Let's dive into what happened in the markets yesterday. So, U.S. stocks wobbled on Friday after a jobs report, seen as pivotal to expectations for interest rate cuts, showed much stronger hiring growth than expected. The Standard & Poor's 500 fell 0.1%, while the Dow Jones Industrial Average gave up 0.2%. Coming off a lackluster session on Thursday for the three major gauges. The tech-heavy Nasdaq Composite shed about 0.2%. Despite the lackluster session on Friday, all three indexes logged wins for the week. Investors have lifted stocks on the expectation that further data will reveal more evidence of an economic cooldown. But the Labor Department report offered another signal that parts of the economy are too hot for the central bank's fight against inflation, feeding into a narrative of keeping rates higher for longer. The highly anticipated May jobs report reinforced the idea that pulling back rates from their two-decade high likely won't come until the fall. The U.S. economy added 272,000 jobs in May, smashing expectations. However, the unemployment rate did tick higher, rising to 4%. Elsewhere in the markets, GameStop booster Keith Gill, aka Roaring Kitty, live-streamed his latest thinking on the video game retailer, saying that he believes in the leadership of the company. Gill confirmed that his positions in GameStop are his own and that he is not working with institutional investors. The event marked his first live YouTube appearance since he helped ignite the meme stock rally 3 years ago. But his event wasn't enough to send the stock in a positive direction. GameStop shares closed down nearly 40%. The completion of Nvidia's 10-for-1 stock split is expected after the market closes. A midweek rally briefly vaulted the AI chipmaker to a $3 trillion valuation, but its shares have lost steam as short bets against the company pile up. Investors will be eyeing the results of the Fed's policy meeting next week. While the market expects no rate change announcements after the June huddle, the release of the dot plot will indicate how many rate cuts central bankers predict will come in the months and years ahead. That's all for today's episode of Capital Markets Quickie. Thanks for tuning in. Be sure to subscribe for your daily market updates, and I'll catch you tomorrow with the latest news. Have a great day, everyone.